Measuring Reporting Conservatism, a paper written by Givoly, Hain and Adriaensen. This is Company X. Company X is an American retailer which sells a lot of products on account. Let's assume that for the first quarter of 2014 a total of $200,000 is sold on account. However, these revenues will be deferred until they are verified. Company X always checks the creditworthiness of their customers. Nevertheless, they made an allowance for doubtful accounts of $20,000. It is reasonably that this allowance for doubtful accounts is overestimated. This overestimate may lower earnings for this period. The allowance for doubtful accounts is in line with the strict revenue recognition criterion, which is one of the most common forms of accounting conservatism. Conservative reporting means that events with an expected unfavorable outcome are recognized promptly in income, whereas the recognition of the effects of expected favorable events are deferred. In the paper of Bas 1997, a DT measure is developed gauging conservative reporting. This DT measure gauges the degree of conservative reporting by the extent to which earnings reflect bad news more quickly than good news. Bad news is captured in negative stock returns, while good news is captured in positive stock returns. So a higher DT measure suggests more conservative reporting. The paper of Givoly et al. Investigates whether this DT measure is free from measurement errors. They find three factors that are not related to reporting conservatism, but that nonetheless are likely to affect the magnitude of the DT measure: the aggregation effect, the effect of nature economic events, and the effect of disclosure policy. They will now be explained one by one. First, the aggregation effect. Givoly et al. Expect a higher DT measure when the effect of bad economic events is more promptly reflected in earnings than the effect of good economic events. Individual events are not observable. Only the aggregated events can be observed, so good and bad economic events offset each other, and this reduces the power of the DT measure. The second effect is the effect of the nature of economic events. Certain bad economic events do affect current period's returns unfavorably, but do not or only partially affect the current period's earnings. The DT measure could be understated because of the prevalence of unfavorable events, which leads to wrong conclusions about the degree of reporting conservatism. The reporting stance of this Company X is expected to appear more conservative as assessed by the DT measure. The last effect is the effect of disclosure policy. The DT measure is possibly overstated. Assume that Company X has an aggressive reporting policy. This aggressive reporting policy is compensated by a more conservative disclosure policy. This will show an overstated DT measure and a higher degree of reporting conservatism than was initially found when looking at their reporting policy. At the end of the paper, also the stability of the DT measure is estimated and measured. The results indicate that the DT measure is not stable over time. The association between the DT measure in successive subperiods of 10, 5 and 2.5 years is non-existent. In comparison with other measures of conservative reporting, the DT measure is less stable. Finally, the ability of the DT measure to detect situational non-conservative reporting is investigated. Situational non-conservative reporting suggests that during periods preceding stock or debt issuances, firms seek to improve their reported performance by managing earnings. The results show that the DT measure for the aggressive reporting group is higher than for the conservative control group. This indicates a big measurement error in the DT measure. These findings lead to the following concluding remark. Be careful with the interpretation of the DT measure, because it does not only measure reporting conservatism, because there are some factors that are not related to reporting conservatism, but they influence the magnitude of the DT measure.
Created using Powtoon.